If you're sitting in XRP right now and still telling yourself they won't let it drop below $1, you need to watch this entire video. XRP has already lost over 40% from its yearly high, and just this past week it added another 13% drop, but that's not even the worst part. The worst part is that network metrics, derivatives data, and institutional demand are all saying the same thing. The pressure isn't easing, it's building. And the scenario where the dollar breaks and price goes much lower isn't some Twitter fear-mongering, it's a direct consequence of numbers that most people simply refuse to look at. Let's start with what removes all illusions. The crypto market as a whole has entered a phase where it's been brutally reminded who's really in charge. Total market cap has dropped roughly 50% from last year's peaks. Geopolitics, interest rates, risk-off sentiment, it's the standard playbook. But the result is simple. Capital is fleeing the riskiest assets. And guess who gets hit first? Not Bitcoin, altcoins. Assets like XRP. XRP's market cap inflated to roughly $145 billion. Now it's around $85.5 billion. That means tens of billions have already evaporated. If you bought into the euphoria, the market has already sent you the bill, and this might not even be the final invoice. XRP ledger. Capital is already bleeding out. Now let's get to what most holders conveniently ignore. The state of the 10RP ledger. Because while people argue on X about when moon, money is quietly draining from the network. According to Defalama, TVL is currently around 48.5 million. At the start of January, it was roughly 80.5 million. Last July, it was around 120 million. Understand the scale here. From 120 million to 48.5 million, this isn't a dip. This is a near threefold liquidity drain from the previous local peak. This isn't markets taking a breather. This is an ecosystem that capital is systematically exiting. Network revenue is also falling. Weekly revenue from the XRP ledger is now roughly 1/3 of what it was around September last year. The less activity, the fewer fees and transaction volume, the harder it is to justify a high token valuation. And if you're ignoring this because you believe in the project, the market doesn't pay for your beliefs. Next, blow derivatives. Because futures and perps show who's really controlling price right now. Retail spot holders or leveraged whales. According to CoinGlass, open interest in XRP futures is declining. This means large positions are being unwound, leverage is being cut, interest in playing the long game at these levels is dropping. Add funding rate to the picture, it's gone negative. That means the market's dominant positions are shorts. People are willing to pay for the privilege of betting against XRP. That's a very strong signal. Not everyone believes in Moon, but the majority is ready to profit from the fall. When funding is negative, it's not just a line in a table. It's pressure that drips on longs every single day and feeds the bearish narrative. If you're still averaging down on this backdrop without a plan, you're not an investor, you're liquidity. Now, the most painful point for those who believed ETFs would save everything. When spot XRP ETFs launched, it was sold as a new era. Institutions would enter, provide liquidity, stabilize price, and so on. To some extent, that was true initially. According to Social Value, last week's net inflow into XRP ETFs was only about 39 million. On paper that sounds okay, but compare it to the launch phase when weekly inflows reached around 200 million. That's nearly a 5-fold drop in interest. So here's the question. Do you really want to play diamond hands when institutions have simply stopped pouring hundreds of millions into this? Funds aren't obligated to prop up your price. When inflows nearly vanish, ETFs stop being a safety cushion, and price is left alone with real demand and selling pressure on the market. Now the chart. No rose-colored glasses. XRP has been living inside a descending parallel channel for months, stretching back roughly to mid-July last year. As long as price stays inside the base case as one, downtrend continues. The 1.56 level, according to Murray math, was critical, simultaneously both major resistance and serious support. That level has already broken. Once price confirmed below it, it automatically opened the door to testing lower Murray levels, and the market is actively taking advantage of that right. MACD on the daily? It's not just slightly bearish. Lines are pointing down, histogram is firmly in negative territory, no signs of momentum reversal yet. This isn't the backdrop for small bounce and we're flying. This is the backdrop for continued pressure. The nearest key level is around 1.17. That's the real line of defense. If bulls don't hold there, the path to the 0.78 area opens almost automatically, and that's already about 44% down from current levels. Now let's add some history so you understand. The XRP market already knows how to deliver real pain. In the previous major cycle, XRP set its all-time high around 3.84 in January 2018. Then came the classic bear market. The drawdown reached over 90% from peak. 90%. On the exact same asset that people were holding to the moon back then too. And it's important to understand this today. When people say with a straight face, below $1 is too much, they won't allow that. XRP has already shown that what you think is the bottom is just another step down for the market. And the second point, bear phases aren't a week or a month. In previous cycles, the decline and prolonged recovery stretched across years into late 2017. Then after the 2018 peak deep into 2020. The market knows how to slowly and methodically squeeze out patience until only those who either understand nothing or are truly willing to wait for years remain. Let's break down the scenarios, but without the everything will be fine, just wait nonsense. Bearish scenario. Macro doesn't improve. Risk off continues. XRPL TVL and revenue keep sliding, funding stays negative, and ETF inflows remain a weak remix of past volumes. In this case, breaking 1.17 to the downside becomes a matter of time, and the zone around 0.78 becomes a real target, not FUD for weak hands. Neutral scenario. Some capital returns to XRPL DeFi, TVL stabilizes, network revenue stops falling, funding moves closer to neutral, and ETFs show small but steady inflows. Then XRP could get stuck in a wide range between 1.17 and 1.56, building a base before the next major move. Not a rally, a base, meaning time and nerves. Conditionally bullish scenario. This is the story where everything has to align simultaneously. Macro reversal, major XRPL news, TVL growth, new products, activity surge, derivatives shift, funding from negative to at least neutral, plus notable ETF inflows. Then XRP would have a chance to break out of the descending channel and hold above 1.56. But importantly, current data doesn't confirm this is the primary scenario. Right now, the market is closer to scenarios 1 and 2. If you're an investor with a multi-year horizon, your job isn't to catch every dollar move. You need to honestly answer these questions. Do you believe in real growth of XRP and XRPL usage? Do you see what specific drivers could bring capital back here? Are you psychologically and financially prepared to survive a deep and prolonged drawdown? The current picture is a stress test for the network, and for you as a participant, capital is leaving. Those who remain are either those who truly see fundamentals or those who are simply stuck. And if you consider yourself the former, your strategy needs to be thought out, not based on memes. If you're a trader, you have absolutely no right to ignore derivatives and levels. Descending channel, broken 1.56, pressure toward 1.17, and risk of move to 0.78. This is the foundation your risk management dances from, not background noise for, well, I'll grab a bit more lower. Trading from levels is possible, but only with tight stops and correlation to funding, OI, and volume. Any attempt to play eternal bounce in conditions of negative funding and deflating interest is a path to becoming a line item in someone's liquidation spreadsheet. Here are the facts. XRP is currently down about 40% from its yearly high. Market cap has dropped from 145 billion to 85.5 billion. XRPL TVL and revenue are being cut. Derivatives show short dominance. Institutions via ETFs have cooled and are flowing in several times less than at launch. Price sits in a descending channel. 1.56 is lost. 1.17 is under threat. And below that, the zone around the 0.78 is shaping up as a real scenario, not a bear's nightmare. If you pretend this doesn't exist, the market won't spare you. This video is not financial advice. This is an analysis of what's already happening with the numbers and participant behavior in the market. Any decisions to buy, sell, or hold XRP are yours alone, at your own risk, with your own head and your own capital.